Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
Tim, the U.S. Fed has said it's not going to hike interest rates this year, maybe once next year. What are they telling us with that?
Well, I think what they're telling us is that they know the market can't withstand, the increases, and they know how, I guess, technically how fragile the market really is, and they're afraid of letting it correct because of the hikes. And I think the message is pretty clear. That's how I see it. And I think that is the message. On the surface, I guess the other way of looking at it is everything's great and, up we go. But, and that may be in the interim, the case. But, the real message, I think, is that, it's a sign of it's why are they taking the stance they're taking. And I think it's a sign that the market and the economy really is pretty weak, pretty fragile and delicate, whatever.
Is it a mistake to prevent the markets from correcting? Or they just do it anyway? I think
it's always a mistake to prevent the market from its natural ebb and flow and rhythm. Corrections are healthy. That's what got us in the position that we've been in with this entire, bubble process is, not letting the markets correct. Corrections are healthy.
Do you think it's because of the pain that comes with a correction that they just don't want to allow it? Or is it because there's a presidential election in a year?
Who knows? Politics is always involved. I don't know what's in somebody else's head, but, the problem is that at this point, the holding and manipulation and distortion of the cycle, however you want to say it, it's the cumulative effect at this point is that it's created the ginormous bubble. And, I think the correction could, I hate to sound so bearish, but, I think that the correction could be, so detrimental that, it's like a, kind of backed in a corner, so to speak. It's been extended to the point that, you created the situation you created and you don't want to let any little correction happen because, it could get out of control. I really believe that's the case. And, of course, eventually, it's going to happen. I mean, you can't control it forever, but they've done a hell of a job so far. But, like I said, I think it's a clear message that they're very much aware of how delicate it is.
Mm-hmm. Now, would a downturn in the markets necessarily cause a recession? On the other hand, some people believe the U.S. could be in a recession. It's just not official.
And that's kind of my stance. I think we are. It's just not official, and it's not reflected in the markets yet because they continue to hold. Technically, we had some higher degree cycle lows in December. My thinking was that they were counter trend and or, part of the continuation of the topping process that took place throughout 2018. It's a long, treacherous process to watch, but I still think that that's underway and that this rally, we had, some intermediate and long-term cycle lows in December, and it has to play out. The setup simply has to play out. And, so we're kind of in a holding pattern from that perspective, that the rally out of those lows is obviously still intact.
We'll have more with Tim Cyclesman Wood right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website grandportage.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, with U.S. interest rate hikes on hold, what's that doing to the U.S. dollar, or potentially could do to it?
Well, the dollar has definitely weakened. I'm not sure what it's doing today. There are some cycle lows due in the dollar, and I think we're moving, down into those lows. Longer term, there's no reason at this point to think that the longer term perspective of a rising dollar has changed. I think that's still on track. Like I said, we're in a little bit of a holding pattern with everything. Not only with equities, if I can digress back to that, but we had that set up back in, it took the entire year of 2018. If you think about it, we had the top in January, and then we declined, and then rallied into September, October, and then the big decline down, and had the triggering of the primary bearish trend change according to Dow Theory and all that. And so it took the whole year for that to set up, and now we have this intermediate term and possibly slightly longer term rally out of the December low unfolding, and kind of the same thing with the dollar. Everything's in kind of a transition phase, and it's taking time. The dollar, we know we had that longer term bottom back in February of, I've lost track of time now. It's February of 18, I guess it was. Yeah, it was February of 18. And, throughout the year we saw that, the dollar, rally out of that low. Well, now it's taking a breather and correcting, if you will. And then I think that's going to resume. Gold, we had, the intermediate term rally out of the September low. I think that is probably done, within the context of the higher degree 9-year cycle top. We had, that counter trend rally, like I said, and I think it's probably done or in the process of being done. And so we're kind of, again, in a transitional phase there as well. And the same with commodities in general, crude oil, I think, counter trend, it is an intermediate term, obviously an intermediate term low at this point. Anybody can see that. But we did have cycle lows due there. We knew it when it happened. We've got intermediate term buy signals still, but I still think it's counter trend within the grand scheme of things. And so we're in a bit of a transitional phase there as well, or holding pattern, I guess I should say, within the context of the overall setup with this topping process and the rolling of commodities.
If the stock market goes down or takes a plunge, will gold suddenly become much more popular?
I don't think so, because the cycles aren't aligned for that. The cycles, so far, and this price action has actually further confirmed that. There's been absolutely nothing to negate the thinking that the 9-year cycle low, or the evidence that the 9-year cycle low occurred back in 15 and that it topped in 16 and that the top is in and that gold goes lower. Now that doesn't mean necessarily that it has to collapse, but it does mean that it trends lower. And my expectation is that ultimately gold does go below the 2016 or 15 9-year cycle low. I'm not necessarily saying that it goes significantly below it. I don't know, but I think we at least undercut those lows as we move down into the next 9-year cycle low, and maybe significantly. I don't know, but the top, every indication is the top is in gold. So this has been counter trend, and I think the counter trend rally is rolling.
We'll have more with Tim Wood right after this.
Juan Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's your feelings or indications from the U.S. housing and auto sectors?
Man, housing, I think, is in the process of rolling as well. It was one of the leading sectors, if you look at it, coming out of the top in 2018. Automotive, I don't have the charts in front of me. It's something I do watch, and the automotive manufacturers, automotive parts manufacturers as well, they do not look good, and I think that is another indication. You know, they led at the top, and they're still showing relative weakness here. When I say relative weakness, I mean on structurally. Looking at the structure of the cycles, they're weak. So I think that is an indication of the overall topping process that has been underway now for over a year in equity / the economy. There is a weakening taking place. It's clear.
Are people do hold on to their cars longer than they used to? Are they holding on, hoping to see more affordable electric vehicles just over the horizon?
And I have no idea about that. I'm hoping that the electric vehicle thing. I don't know. I don't have any data. This is just my personal thinking. Is that's got to be a fad, man. I just can't see. I can't see that being viable long term. But I don't know. I mean, it's kind of laughable to me. But that's just my personal opinion. I have no idea about the electric vehicles. I have no clue.
Tim, what's going on with the transports?
Transports are weak or weaker on a relative basis to the industrials, and again the Dow Theory primary bearish trend change that took place is still in place. Can it be corrected or mended, and can be kicked down the road as the evolution of this overall topping process takes place? Absolutely, but it hasn't been so far. And so, according to Dow Theory, once a trend change, be it bullish or bearish, takes place, the assumption is that it's in place and until it's reversed. And that has not happened. And, one criticism of Dow Theory is that a lot of people say that, once a trend change occurs that, there's always that big counter trend move. And that's absolutely true. But if you think about it, look at it with the market. Let's look at this. Let's go back to 1999. As I recall, it was September the 23rd, I believe, of 1999. A primary bearish trend change was triggered, and the industrials moved down into a low. I'm not looking at the chart. I want to say it was an October or November low. And then they rallied into January. The transports did not confirm the rally, and so the signal stood, and the market moved to a new high. And I remember Richard Russell making the call. He was the leading Dow Theory guru at the time. He made the call, and I remember feeling the heat for him because I mean, hell, the market moved to a new high, and he'd made this call, but he was right. And he was right in the call. The data was right. It was. I mean, there's no flaw in the call at all. And so, but if you think about it, this is not an excuse. It's a fact. is how Dow Theory works. Meaning, in order to trigger that primary bearish trend change, you have to be moving into a low by design to break a low, right? I mean, you have to understand what's taking place, and so that's to be expected. I mean, obviously, you don't know how high the bounce is going to occur. That once it takes hold, but it's normal to expect that bounce. In that case, like I said, it took the market to a new high, but the setup remained in force. And then we got, the kind of the stale period for the rest of 2001, it got going, and then we had the 4-year cycle low. Most people have forgotten all about that, but that was a nearly, I don't remember the numbers, 30 some odd, close to between 30 and 40% decline into that low. And we had 9/11 and all that sort of thing. And then the same thing just happened, in the current case. We had the Dow Theory primary bearish trend change, and then the market has bounced. But nothing has changed to reverse that. And so until it does, it stands.
Tim, thank you so much for chatting with us.
Jim, thank you very much.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have questions for Tim or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.